Well, let's talk about some stocks and a commodity that's doing really, really well. We're going to go to Sector Spotlight, going to be gold and silver. All right, Scott, we talked about gold stocks last week that they were sort of setting up to break out. A lot of them have already broken out, but gold is still not pulling back. I was speaking with you before we got on air, and I was saying that every single technician, trader, strategist I'm talking to is all expecting a correction. We're just not getting it. So I wonder what that means for the stocks.
Well, it means a few things. It just shows you that even if you're bullish and you have a long-term thesis, it's sometimes hard to stay with it because of the action. I've been talking bullish gold since 2008 at 850. I said 1500. In December, I said 17, 1800. I wish I would have just held my tier 3 the entire time, but we're traders. We trade around it. So whenever situations get extended in nature, it causes you to act differently. If you look here real quickly just on the GLDs, you will see, a very methodical uptrend all the way that's starting to accelerate again. Okay, you had a buy price here, you had a breakout nice down here. If you guys remember the reverse head and shoulders on a macro basis where we talked about it years back before it just kept going. But if you look here on the daily chart, it makes it really hard to buy. This was the last time we spoke saying you perhaps could buy the 8-day, 10-day, you had a 3-day controlled pullback, and now pow. And now we're even gapping up today.
Yeah.
So with that said, you have to know your time frame, and you have to just not fight a strong trend because there are some people getting their heads knocked off.
So real quick before we go to the stocks, this will be a good lead-in. So you wouldn't be adding here because we're too extended, but would you be perhaps selling again if you hadn't before?
Well, if you're in tier 2, tier 3, once again, I want to say congratulations, you're a better man than me. I would sell 1 or 2 of those, get down to a tier 1, stay long term, but keep taking trades as the excitement comes in, because one day you're going to get that sharp pullback, and then if you're only in tier 1, you'll have the luxury of buying back like you could have at the 8 or 10 day, a week or so ago.
All right, so let's go to the stocks. We talked about Yamana was one of the first to break out. We were looking at that last week. How do you handle the stock now?
Well, this one I would just let go. We talked about these miners finally, getting some momentum.
Right.
A lot of analysts, like you've been saying, Alex, have been all over this for the past few months or almost a year, and then finally the technicals caught up. So when they're going, you got to stay with them. And this one was the first one to make a new high on the year. We talked about it right around this area, and it's now extending, showing you that it can happen. Obviously, you take trades along the way, considering this was just at $11 in June. That's a 50% gain, over the course of the summer. So that's nice. There are some other stocks that look like they could play catch up that have better technical setups. And
the two that we were looking at last week were Rand Gold and Royal Gold. Now, Rand Gold was up almost 9%, 8.5% last week, but Royal Gold only up 4%. So I wonder if the latter has more of that catch-up play to it.
So let's look at RGLD first.
That's Royal Gold.
Royal Gold.
Up 4% last week.
Okay, this was a technical breakout. This was an area to get long, and now we're wedging again. I would watch this. My traders will be watching this. Nice day on Friday. Looks good. If this starts to get above the 70-50 area, this could be a nice momentum trade. 2 new highs, and also reward investors that have been holding as it's been above the moving averages for the course of the past few months. But here is a momentum trade to watch.
Real quick, what about Rand Gold? It already had that big breakout, right?
Well, this one started to go earlier. Okay, here we spoke about it, I think, right around this. What price was this? About 104, 105. Now it's a 109, closing the highs. Momentum's there already. If you're there, stay with it. If you're in more than a tier 2, tier 3, you sell some into that. But these things, are under-owned and can continue.
All right, real quick, Barrick and Newmont. Want to hit on those because we talked about Barrick last week, but didn't hit on Newmont. And most guys I talk to who are new into the gold stocks always go to Newmont because it has that sexy dividend. It's tied to the gold price. So I wanted to see about those 2 stocks. They're the biggest ones. They tend not to be that high flying, though.
Well, Newmont, the market caps are so big for even gold stocks that it's harder for these things to get frisky. But Newmont's starting to wake up. I think a lot of value individuals out there that need to be in these miners feel safer going to these big mega caps, and Newmont is finally starting to break above resistance. If you look here, on a more macro approach, you still have this downtrend in place, but it's starting to poke its head above it. As long as it stays above this 58.50, I do think at some point this can make new highs in the year. It probably happens more in September through November, but if you want some safety and some exposure, this Newmont is probably decent to look at here.
All right, let's really briefly touch on silver. Finally had that breakout over that $40 level that a lot of traders I was speaking with were really looking at. We talked about Coeur d'Alene Mines, which is 60-40 silver gold miner. You were like, don't really touch it next week. But what do you think about silver now? Are you shorting?
Sure. I'll take a look at CDE first.
Okay.
It's still, if you look at it on a daily chart, it's not really, like, look where it is.
Not
It's
ready
still,
to go?
it's not, you could keep an eye on it if it starts getting above this 28 area, but it's still below this resistance. It's well below the highs. It's just starting to work through the moving averages. It's not as good as one of the miners yet. As far as silver, though, silver finally started to break out again. You know, you remember this parabolic curve that got really crazy. Shorts were all caught. Everyone was waiting for it to break, and it broke. Okay, this was a great short back then, and now it's taken, you know, about 4 months to consolidate. So now, with it breaking above this recent range, I think you should not be shorting silver.
Okay.
It actually could try and work its way back towards the highs. Last time we talked about getting long this was right around here. And
Would
yes,
you add to your long now?
it's opening up about 3% right now, so it closed in the highs. What momentum guys probably did is take it home long. Some will probably sell into the up open, considering, you know, it's been churning its way from 38. It's probably opening around 43. This I would stay with tier 1, and I would start to trade silver more actively. Now's the time, especially if gold continues higher. People are like, oh,
yeah,
silver's only 44. You know, why can't it get back to the highs of 49? If it gets through there, it could be another round of excitement. Right now, there's not excitement. There's just momentum building.
All right, fair enough. We will be right back with some more quick trades for today.